Yeah, then we are moving on to the adjustment number 5. The adjustment number 5 has given the composition of property, plant, and equipment and the accumulated depreciation as at 31st 3rd 2017. And now we're gonna put all these balances under this property, plant, and equipment column. So let me consider. Now they have given land at cost. These are brought forward balances. I'm going to record it under property, plant, and equipment. I'll move on to changes in, property, plant, and equipment. As land 10,000 they have given. Machinery, how much is machinery they have given? They given machinery 21,000, motor vehicle 4,000 and 7,000. So 21, 4 and 7. So I'm going to record 21,000, 4,000, 7,000. 21,000, 4,000 and 7,000. So altogether, my total property plant equipment is 42,000. Then we move on to the next point. It says that the land is measured at revalued amount and all other assets are measured at cost. The land was revalued on 31st 3rd 2017 for rupees 12 million for the second time, and it is yet to be recorded. A deficit of 1,200,000 was reported when this asset was revalued for the first time in the previous year. Now you see this 12 million is a surplus of adjustment. From 10 million is the cost. So now land is revalued at revalued amount. So 10 million and 12 million is how much? 2 million differences. So now this 2 million is a surplus, but there is another deficit of 1,200,000. So I'm going to take this 2 million as surplus under property plant equipment as revaluation. Now I will consider here 12,000 is my final balance. There's no depreciation for land. So I'll take carrying amount as 12,000 down. So I'll keep here dash. So that's how land is done. So I took the 2,000, 2 million as 2,000. Better if I can put in rupees in. So now there's no depreciation for land. So I took 12,000 down. So now I just need to record few things because now revaluation I had 2,000 revaluation, and then I had 2,200 deficit. So actual revaluation reserve changes 800. So I'm going to take this 800 towards income statement as change in revaluation. So change in revaluation surplus is going to be, as you all know, that it's 2000 minus 1200 deficit. So you will get a surplus of 800. Let me record that. And on the expense analysis column, you need to record the actual deficit which you have gone through. What is the deficit we have gone through on land? Deficit on land revaluation. So this 1200 deficit will be considered as a other expenses. So I will take 1200 deduction. And the 800, now I have, as you all know, the 2000 difference, I have recorded it under changes in devaluation reserve, 800 surplus. Then I recorded the deficit under which area, under other expenses. And again that 800 should be recorded under changes in equity under the evaluation reserve column. Where do we record? We record under total comprehensive income. So it's as simple. What I did, I recorded under the evaluation reserve, total comprehensive income is 800. Then I recorded under income statement, under expense analysis 1,200, the difference, the loss. And I also recorded the 800 again under uh, profit for the period. Under that, I recorded changes in revaluation reserve. So these are the basic adjustment when it comes to revaluation reserve. So we have done with the adjustment number 5. Let me move on to adjustment number 6. What is adjustment number 6? Adjustment number 6 says that property, plant, equipment except land are depreciated at 10% per annum on straight line basis. Depreciation has been provided for the current year. However, the revision of the remaining useful life of distribution van is 8 years on 1st 4 2016 has not been considered in providing depreciation for the current year. Now you see here, I said depreciation has been provided for the current year. If they have given the depreciation for the current year, this is the accumulated, this should be inside the accumulated depreciation. So before moving on to the 6th and 7th adjustment, I'm going to do the, because I feel like lorry is a part of motor vehicle. I'm going to keep lorry and adjustment number 6, and I'm going to finish it off plant and machinery and furniture first of all. So as we all know, in this question on adjustment number 6, they're saying depreciation has been provided for the current year. So let me find the depreciation for each of these asset, which is plant and machinery and furniture and fitting. And I wanted to find these are the closing balances of accumulated depreciation, because they said I already found the current year's depreciation. So I'm going to go towards the sum and find the depreciation for this year and the workings. So let me write the workings. Workings number 6. Let me say depreciation. As you all know, I'm doing PP, I mean machinery, plant and machinery. Depreciation. How much is plant and depreciation? Plant and machinery depreciation. It is 21,000. So the depreciation is 10%. I've said in the sum 10%. 10 divided by 100 is 10%. They give you 2,100 depreciation. Now again, let me read the sum. It says that property, plant, and equipment except land are depreciated at 10% per annum on straight line basis. So it is 10% per annum on straight line basis. So I have calculated 10% per annum. 2,100 is my depreciation for plant and machinery. I will record here 2,100 as depreciation for the year. So what was the accumulated depreciation final balance as they are given 31st third, and this is the final balance. I can conclude 9,700. 9,700 here. I will write here 9,700. So in 9,700, if I can deduct the depreciation, I will get, what do you say? Record here. I will record here 9,700 minus 2,100. I will get my opening balance as 7,600. So I have done my basic adjustment when it comes to machinery. Then when you are moving on to the furnitures and fittings, yeah, we are going to do the same thing because 7,000 is the amount of cost we have. Furnitures and fittings. Fittings. How much is furnitures and fittings? Furnitures is 7,000. Let me take 7,000 into 10%. So 700. So I'll consider depreciation for the 700. Furnitures and fittings is 700. And I have my closing balance of furnitures and fittings 2,800. So I will consider 2,800 here as accumulated depreciation final balances. So 2,800 minus 700 will give me my opening balance of 2,100. So let me move on to the next one. Now we need to move on to motor vehicles. Before that, I want to finalize my machinery and furnitures and fittings. So machinery, I have not purchased anything, so I will consider it as 21,000, and I can conclude it as 21,000. And furnitures and fittings, I can conclude it as 7,000 because I have not purchased anything. But I have small additions in a motor vehicle. Before that, I want to do the adjustment number 6 for your understanding. So let me move on to adjustment number 6 without wasting your time and mine too. So property, plant, equipment says that depreciation made on 10% straight line basis, depreciation has been provided for the current year. However, the revision of the remaining useful of distribution van is 8 years. Now you see here, the actual depreciation of this motor vehicle is 4,000 and the accumulated depreciation is 2,000. So they have wrong, they have calculated it wrong because actually the accumulated depreciation is considering this year's depreciation inside this. So we need to remove this year's depreciation because actual 4,000 we can't take because they're saying it has useful revision of the remaining useful life. So you need to take the remaining useful lifetime of 8 years when you are taking the what do you say, when you're taking the cost. Okay, but we can't take cost here. First of all, I need to find my accumulated depreciation, deduct from the cost, and I should divide it by the number of years they have revised it. Now let me move on to the concern of this question. Question number, adjustment number 6. So we have motor vehicle at cost. How much do we have at cost? 4,000, as you all know. So this was the 10% depreciation as I have seen for every vehicle, every property, plant, equipment. I got 400 here. So accumulated depreciation, actual accumulated depreciation, I mean brought forward because now closing down is 2,000. All know. So now I'm going to deduct the depreciation, and I will find what? I'm going to deduct the depreciation in order to find. Now I will get the accumulated brought forward depreciation. So I will take this 1,600 and I will record it under balance as at first motor vehicle. So I have done this basic adjustment. Then we are moving on to the next one. What I have done. So 1,600 I have recorded. So now actual depreciation is different because it says that actual depreciation. I want to find it out. Now you all know that the lifetime of the vehicle has changed. It was earlier for 10%, where 10% means how many years you can use? 10 years. but now it has gone for 8 years. So, but before that, I just wanted to know that now if you take this accumulated depreciation, they have said 1600 for a year. If it is 400 means for 1600, if I divide it and show, they have used this vehicle almost for 4 years, right? Which means the actual value of this cost is 6 years remaining. But now they are making it for again actual the useful lifetime. They revised it for 8 years. When I revise this value, I want to go with carrying amount. Yeah, I will take 4,000, which is the cost. I'll take my cost. I'll reduce the accumulated depreciation 1600. So I'll get my carrying amount 2400 and divide by the number of revised years. 2400 divided by 8 is 300 depreciation. Now actually, first I got 400 at depreciation. Now I'm getting how much? I'm getting 300, so which means they are wrongly charged 100 under profit and loss statement because this depreciation has already been calculated. I will remove this difference depreciation. Now, what was the error depreciation? Depreciation inaccurately charged. How much? 400. Correct depreciation is how much? 300, right? So 400 minus 300 will give me amount of 100. The reason they have charged 100 excess. This 100 I should remove it from the analysis column because this is a wrong way of charging a depreciation. So I will go to analysis column, expense analysis column, and I will write here decrease in depreciation. How much is decrease in depreciation? Distribution expense because it's motor vehicle, I consider it as 100. So did you understand this, the basic adjustment? But still, you might, okay, now sir has found the depreciation, actual depreciation is 300. Why sir is not putting here? You might think, why sir is not recording it under depreciation for the period? Because the depreciation for motor vehicle is not yet done. You need to remember, now this is actual depreciation, this is the cost. So we had found with the cost, but on adjustment 7, I have a few more adjustment. What is that? Adjustment 7, I need to do few more adjustment to find the actual depreciation. So once I found the actual depreciation on adjustment 7, I will add with the adjustment 6 actual depreciation and then I will take to the depreciation column under motor vehicle as depreciation for the year. Without that, I can't take here. So here you need to know there's 300 already, first of all. But not only 300 is there, there's one more thing. There's there's another depreciation for adjustment number 7. Let me keep it whole and move on to the adjustment number 7. I hope you understood adjustment number 6. Then adjustment number 7 says that a lorry was acquired on 1st 4 2016 on finance lease basis for 5 years. Its fair value is 5 million. The ownership of this asset will be transferred to the company at the end of the lease term. The lease interest relevant for the first year and the second year are 500,000 and 418,000 respectively, and total lease interest for the remaining 3 years is amounting to 682,000. Annual lease installment is rupees 1,320,000. It has been paid at the year end recorded as distribution cost. No other increase has been in relation to this transaction. So first of all, I need to understand this lease is 5 years and its fair value is 5 million. So I can do the first of all the basic part. You all know the cost fair value. So how much is the fair value? 5,000. What is the depreciation I'm going to take? Whatever the assets I need to find the depreciation. So it is 500. So I will say take this 500 plus what is the motor vehicle? Motor vehicle at cost depreciation is 300. We are found now. Adjustment number 6. Now this is lease motor vehicle. How much? 500. Altogether depreciation is how much? 800. So I will record here 800. So and I can conclude my and additions, revaluation, addition, I will take 5,000 as an asset. So I will record here 9,000 and I will record here 2,200. So keeping this adjustment, with this I can conclude this whole column. Now I'm going to calculate the whole thing and I'm going to transfer it to the PPE. Here 2,000, so I'll write here 2,000. Let me make it a bit smaller. Okay. So now I got 2000 total. Then in this side I have 5000. Altogether my total will be, my total is going to be 49,000. Then I have, okay, so here I have 7,600, 11,300. Here I have 3,600, and here I have 14,900. So easy, I can deduct my cost with the accumulated depreciation. So 21,000 minus 9,700 will give me 11,300. I can easily take the cell columns. This minus this. I know you can't do this in exams because you don't have Excel sheet, but this is how you need to calculate. I mean, your balance of as at 31st 3 2017 of cost minus balance of accumulated depreciation. Get 4,200, and finally 49,000 minus 3,400 is your PPE amount. So I will take this 34,100 into property, plant and equipment directly under statement of financial position. Okay. So I'll move on to statement of financial position. Property, plant and equipment 34,100. There's nothing to take in cost. There's nothing to take in accumulated depreciation because all done, clear and cut on the adjustment number, note number 3. So we are done with this. Now let me move on to the adjustment of leasing. Now you all know that the value of this asset is 5,000. Let me take lease installment because this vehicle is on lease of for 5 years. How many years? 5 years. Let me move on to the question again. It says on the question, the lorry was acquired on 1st 4 2016 for finance leases basis for 5 years. Its fair value is 5 million. The ownership of the asset will be transferred to the company at the end. At the end of the lease term, lease interest relevant to the first year and the second year, 500 and 418,000. So they have given the first year lease interest and second year lease interest, and the total lease interest of the remaining 3 years is 682,000. Lease installment is 1320. So they have considered this lease installment as a distribution cost. They can't consider lease installment as distribution cost. The reason, it's a purchase of an asset, so asset purchase cannot be an expense under expense analysis. So first of all, I will remove that 1320 because lease install, they can't put under purchase of an asset as an expense. How much? 1,320. I hope you understood this. And there's a small thing I forgot to record. The lorry new purchase, lorry's depreciation I forgot to record. Lorry's depreciation is also distribution expense because this has not been accounted on the books of account. They haven't shown the addition, so this 500 will be a plus. So I've done the basic necessary adjustment on leasing adjustments, but here we have a bit more onto that, bit more onto the sum. So let me move on to the first year installment. I want to remove my take until 5 years. So I'll consider this as first year, as this one I will consider it as second year, second, third, then I have fourth, then I have fifth. So I'm done with 5 year installment. What is the installment amount for a year? 1320. As you all know, this basic amount, I will record the same amount in all the following balances. Now I wanted to remove the interest every year in order to record it under my business expense, because I need to know how much is the actual value I need to pay for the business. Okay, now you all know my cost was how much? 5,000. Okay. So now let me read it again. The question says, the lorry was acquired on 1st 4 2016 on finance lease basis for 5 years. Its fair value is 5 million. The ownership of the asset will be transferred to the company at the end of the lease term. The lease interest relevant of the first year is 500,000. So this lease amount is 500,000. They haven't. I'm going to deduct this 500,000 to know my actual balance. Okay. What do we take? Deduct 500 from 1320. So if I deduct 1320 minus 500, I will get my actual amount is 820. This is the amount I have spent to purchase the asset. This amount I can't show because this is an expense. It's not an expense. This is a cash transaction which I have recorded. The money has gone to purchase an uncurrent asset, so I can't show this. But here I can show how much money I am liable to pay. So on the second year, they are saying we are having an interest of 418. And the question they have said that 418 is the amount of money which we need to pay. So I'll deduct this 1320 minus 480. So I'll get 902. Then on the third adjustment, what is the third adjustment they are given? They said that you need to pay 682,000 for the remaining 3 years. So I can take all these three together. What is this, all these three together? So all three amount is 3960. Okay, so this all three, I will merge this as one. Okay, so 600 and let me see what is the amount. 682. So 682 is the amount for all three interest. So now this all three will give me 3960. I want to take, yeah, 3960 minus 682, which is the interest. I will get how much? I will get, this is the long term. This is what we say non-current liability on lease, because we need to pay it. This is the next year payment, which we say current liability. So what I will do, I will take this 902 and transfer it into the current liability of SOFP. So I'll go to the SOFP. First of all, I'll record the current liability. I'll record it as lease creditors. Okay, how much is the amount I can record? 902. Then non-current liability, I have lease creditors. I have 3278. So I'm done this adjustment. So I'm done with almost with the leasing adjustment. So I'm now seeing, is there any other things to record? Yes, there is one more thing. This is the interest which I need to pay, but I haven't paid. They have not said about anything I have paid about this. So I need to pay this amount. So this becomes interest which should be paid under finance expense. So I will consider it as a finance expense, interest payable, and the expense analysis column. Yeah, interest on lease. How much? 500. Finance expense. So I have recorded, but this has not been paid. So I will consider it as note number 6, other payables. Payables, note number 6. Let me take, give me a second. Let me take this 500 as, so we can take another payables. This is a lease payable as 500. We have done this adjustment. Then we have recorded under finance expense also. I hope that's all we need to do when it comes to this adjustment. There's no more, nothing to think, because you need to remove the interest whenever you pay the lease adjustments. Whenever you make the payment towards the asset, you need to know actually how much you need to pay. So you don't calculate interest amount for future. You just need to calculate what is the amount we need to pay in future without the interest. That's how we need to ensure. So this 682 should be a minus 682. So then if you have these three balance, if I get together, it is 3960. If you deduct this 3960 by 682, it will become 3268. I can merge it and show you. The whole balance is, yeah, I'm gonna delete this and merge it to show this whole balance is 3960. Because it's three balances, 1320 into three installments balances. Yes. So I hope you understood the basic adjustment of leasing. So we move on to the adjustment number 8 and 9 now. Okay. Ordinary shares of rupees 500,000 were issued during the year and amount was received in full. The amount has been recorded in the sales account. Okay, then let me move on to the adjustment number 9. Adjustment number 9 informs us regarding a share issue. 5,000 were issued during the year. Amount was received in full. This amount has been recorded in the sales account. So this 5,000 they can't record it in the sales account, which means it is a issue, right issue. So we need to remove this 5,000 under 43,000 of sales. So let me move on to income statement. First of all, I'll move on to sales account. I will have 43,000 deducted by 5,000 because it's priority show they can't record it in under this. I'll record here 38,000. So this is my sales. Then move on to my changes in equity. First of all, I'll show my share issue. Changes in equity, my share issue. I will put share issues 5,000. Let me move on to the opening balances. What I can put. What are the opening balances I have? Do I have any other stated capital? I have here 15,000 and 5,400 retained earnings. So opening stated capital is 15,000. Retained earnings is 5,000. I have recorded the both basic adjustments when it comes to this. Now we are going to move on to the next point. What do you have on next point? Do you have on next point? We have adjustment number 10, the bank loan, right? We have the bank loan. So the bank loan was obtained on 1st 2017 at an annual interest of 10%. The settlement of the loan will commence after 2 years. However, interest for this should be paid from the beginning. Only 2 months interest has been paid. They took this loan on 1st 2017, which means if I'm going to take this bank loan, how much bank loan we have taken already? We have taken a bank loan of 12,000. So 12,000 into 10%. I can show it under another working. Maybe let me take this working as working number 8, bank loan. Bank loan. How much is bank loan? 12,000. We need to take an interest of 10% per annum. So 1,200 is the amount. 1,200 into because they started this bank loan on. I remind you, they started this bank loan first 2,000. So first 2017 to 31st 12. I mean third 2017 is how many years? It's I mean how many months? It's 3 months. So I want to calculate only for 3 months. So 1,200 divided by 12 into 3 will give me 300, right? But how much they have paid bank loan interest? Let me see how much they have paid bank loan interest. I'll move on to the sheet, go to the trial balance and see how much they have paid bank loan. Have they given any payment? Interest paid on bank loan is 200. So we need to pay 100 more. So I'll consider it as an accrued expense because we need to pay 100 more. In 300 they have paid 200. So how much they need to pay? Payable 100 they need to pay. So this bank loan interest paid, I'm going to calculate. So whole bank loan interest payable is 300. So I will take it as a finance expense. I will write it on the expense analysis column, finance as interest on bank loan as 300. So I hope you understood this. This interest on lease, there's a small mistake on the interest on lease. What we need to do, this is a interest on lease. I think they haven't said on this adjustment on adjustment number 7. They never said that this is not paid or payable. So we need to consider this has been already paid under finance expense because I hope they have given. We need to consider it as paid because they are not said it is payable or paid somewhat. There are no balances. So it's better we take we need to take because they have not given anything regarding the interest. It is good and considerable. We considering that 500 is only a finance expense, not an expense on changes in, not an expense under current liability. So I will remove this interest and a note number 6 as lease payable. Okay. Then there's one more amount. Now we find accrued bank loan interest. What is this? Accrued bank loan interest is 100. Yeah, so we have done all the adjustment related to this sum. Now we wanted to finalize every sum. We'll move on one by one. I hope I have done all the adjustment related to this. question. So let me move on. Recording all the sums from vice versa. Property, plant, and equipment we have concluded. It's done. Cost of goods purchase, purchase of goods, raw materials, inventory, goods inventory, distribution cost, administrative expense. Value added tax I have a difference because I need to consider my purchase is 2,300. My sale is 2,800. So I need to pay VAT on the sales and expenses. So whatever I have paid, I have claimed it. Whatever I have sold, I have not claimed. So this 2,300 and 2,800 will give me a 500 differences. This 500 is payable. Okay, so I'll consider here VAT payable. How do I consider it as? Right here VAT payable 2,800 minus 2,300. VAT payable is 500. Okay, so that's all VAT adjustment. So let me move on to the sheet again and conclude that VAT adjustment is also done. Then we move on. Interest paid on bank loan done. Income tax paid done. Dividend paid 1,700 should be deducted from changes in equity under retained earnings because it's a dividend payment. So I'll consider interim dividends payment as a reduction in retained earnings. So that's also done. Then we have sheet 1, bank and cash 6,000. Let me move on to statement of financial position. Record the 6,000, cash 6,000, right? And for our surprise, there's no trade receivables, which is a thing which we couldn't accept. This sales is also done. Bank loan done. So I need to record non-current liability bank loan 12,000. Let me record it. I'll move on to statement of financial position and record under non-current liability bank loan 12,000. That's two done. And let me move on to sheet 1. Adjusting that provision for income tax is done. Stated capital is done, and return earning is done. So we need to find the profit. Before that, I think I wanted to remind you there's a small adjustment which we missed on note number 4, inventory. Always use note number 4 as inventory. So we all remember that how we did the inventory adjustment. So I remind you again. I'll finish because we are finishing this sum. I want to show you. We want to show you how you got the 4,000 to financial position. So we got raw material 2,000. I showed in another workings, but it's better you show on the inventory under note number 4. Okay, and we got it as finished goods, means we found this as 2,000. So altogether we got this as 4,000. That's how we transferred it to the financial position. This 4,000 is the 4,000 you are seeing here, right, on the inventory. And this I have shown this under this working also. If I'm not mistaken, inventory adjustment should be note 4. I showed it here, but it's better you show it in another note because you don't examiner doesn't like to see your workings. Like if you don't have, if he can easily find out his answers, then of course he will be very happy to go with answers rather than workings. It's better you go with all his notes. Okay, so we have sales. Let me adjust it soon. So I will get sales minus cost of sales. I will get 19,300 as gross profit. Yes. As we didn't have any other income, let me move on to expense analysis column. Finish it off all the totals first of all. I get all the totals. Yeah. So you got 7,080 and distribution expense. You got administration expense. So administration expenses, how much we got? We got 8,200. So let me record 8,200 administration expenses. Then we have other expenses as minus 900. So minus 900 means in profit and loss account, it will become a plus 900. So I'll record here 800 finance expense. So I'm going to take one by one. 7,800 distribution expense. Yeah. Minus 7,080. And administration expense, I'm going to take 8,200. And other expenses, we had 900 plus, and finance expenses, how much? 800. minus 800. So I will get my profit before tax from gross profit. If I deduct all my expenses will become, I'll record these expenses. Yeah, no point. It's no problem if I record here 4120. Okay, so my expenses is 15180. So when I deduct from 19,300 15180, I get 4120, right? So with this, if I deduct my tax, I get 25 sorry 2520. This is the amount I'm going to transfer to the changes in equity 2520 under retained earnings and total comprehensive income. So altogether, my total comprehensive income will become how much? My total comprehensive income is going to be 3320. This is my other comprehensive incomes total. Now I'm done with my statement of financial position. Now I'm going to move on to the statement. I mean income statement. I'm moving on to the statement of financial position. So I had other receivables. Let me take those from note 5. Note 5. I will record here note 4. Better you write their names. The examiner knows which note to refer when he wanted to give the marks. Okay, so then we have property plant equipment. We got it from note 3. As you all know this very clearly. Then we have note 5. What is the note 5 is the actual amount. We got note 5 director's remuneration fee as 400. I'm going to take this 400 to other receivables. So altogether, my current asset is going to be 10,400. So 10,400 altogether. My total asset is 44,500. I have recorded this. These creditors and bank loan 15278. I just confirm. Did we have any trade payables, guys? No trade payables, no. No trade payables, no trade receivables. Lease creditors 902 we had. Let me see any other workings we have missed to take. Before we move on to the capital, non-current liability, I'll remind you, I'll take this column. There's a column to write capital, right? So I'll take this down. And capital has a lot to fill. Most of the time we need to fill. Consider this. Keep it space so it's very easy for us to understand what are we doing. So then here I'll make it as a column. Okay, so capital, I want to finish the changes in equity before I finish the sum. Now let me move on to change in equity. I have ordinary share capital. I have ordinary share capital as how much? 15 plus 5, 20,000. And revaluation reserve as 800. Plus retained earnings, I am getting as 6,220. So I will show the same value here. In horizontal basis 20,400, and I have 5,000, and I have 3,320, and I have deduction of 1,700. So I'll show my retained earnings as 27,000. This is my actual capital of a business. When I'm taking this to the financial portion, I'm going to take stated ordinary share capital balance, then reserves balance into. So how I'm going to show my stated capital? So stated ordinary share capital. How much is my stated capital? 20,000. As you all know this, we found this. And what is my next? Reserves. So I'll leave a space and write reserves. The topic, small topic. Okay. And reserves we have revaluation reserve, which we got 8,000 from here is an equity. And retained earnings, we got 1,000, 6,000. How much? 220. 6,220. So I will write here revaluation reserve plus I might write here retained earnings in. So this is not 8,000 guys. This is 800. I'll take the total of this 7,020 and let me bring this balance to this side. Okay. 20,000 balance. I should highlight it as underline it. It's a compulsory thing. Bringing the balance to the next slide. So I have other payables. I want to show other payables. I will move on to note number 6, and I'm showing other payables. On sheet number 3, you might see other payables. We got, let me finalize this. We got 1,300. Let me put a column and say total. Total 1,300. So I have 1,300. So I'm done with this. I hope. So I'm done with this. I hope I have done the whole sum. So let me bring this balances to the next slide. 22. How much is this? 2202. So in total, okay, in total, equity and liabilities. How much I'm getting? I want to get the same balance because it should be balancing on either side. Balancing, guys. So 44,500. That's all. Company's account. Thank you for watching the video. And if you have time, please subscribe to learn more from us. Bye.